This is Bloomberg Crypto, a daily Bloomberg iHeart podcast. And I'm Stacey Marie Ishmael, managing editor of crypto for Bloomberg News. It's Friday, September 30th. With apologies in advance to TS Eliot, in finance, September is currently held to be the cruelest month of the trading calendar. This extends to crypto markets too. Almost every year since 2013, Bitcoin prices have struggled in September. And market conditions have been especially unforgiving this year. So what's the outlook for crypto asset prices as we leave September behind? Joining me now from Sydney, we have Jamie Coutts, crypto market analyst for Bloomberg Intelligence.
I was of the view that really we would bottom out in the second half of this year, and I still think that is entirely possible.
Jamie, what a pleasure to have you on the show. Thank you so much for joining us.
Thank you very much for having me, Stacey.
Tell me a little bit more about, what the part of Bloomberg that you work in does and how you got here.
Yeah, sure. So Bloomberg Intelligence is the research arm of Bloomberg. So in terms of just the number of analysts and strategists, if you think of it in the context of like an investment bank or a sell-side broker, it's a pretty large operation. It would sort of be in the top 5 or 6 in terms of research. Yeah, so I mean, it spans across all the global offices. And, the way I came into the Bloomberg Intelligence role was really, I was at Bloomberg for 7 years prior. I was working as a senior equity market specialist based in Singapore. And that really speaks to my background and history as a sort of an equity sell-side equities trader for the past sort of 20 years or so.
It's been a long week, the highlight of which has been the Fed. Digital assets essentially did not escape the volatility that we saw across financial markets post-Fed.
Not at all. So you actually saw Bitcoin outperform traditional stocks a little bit, but if you zoom out, it's just been a brutal stretch for Bitcoin, down 58%, almost 59% year to date.
We are obviously not just in a kind of a normal downdraft. We are at, as I'm looking at prices right now, we're sort of hovering well below $19,000, which is, of course, for one Bitcoin, which is significantly below the highs that we've reached this time last year. One of the things that you have kind of covered a lot for both Bitcoin and Ether are what you see as some of the fundamental drivers of that relative underperformance. Like you've talked about liquidity risk a lot. Can you share your perspective on how you're seeing Bitcoin and Ether do both relative to your projections, but also to kind of the broader markets that you're so familiar with?
Yeah, so I started this role in January, and really from the outset, we put out the outlook, which was that crypto is going to underperform at least for the next 6 months, because it was clear that we were entering at that stage, even though rates hadn't started to rise, but we were entering a tightening environment. And if you just look at the Fed balance sheet and overlay that onto the Bitcoin price, it's a chart that I've been using since 2016. It's very clear that the Bitcoin and crypto cycles follow monetary conditions. What's evolved is something, vastly different to the previous cycles, with the rate of change that we've seen in the price of money, the interest rates, and also the degree of tightening or in the withdrawal of liquidity from the financial markets by the Fed. So this is not like previous cycles, although it still has similar hallmarks. I was of the view that really we would bottom out in the second half of this year, and I still think that is entirely possible. I think what we saw in June had all the hallmarks, again, of a capitulation style bottom that we've seen in previous cycles. All the markers that I look at and I had on my sort of board of things to tick off for a low in crypto sort of came to fruition in June because of the things that I mentioned, that change in liquidity, the tightening of interest rates. This cycle is, I think, going to be a little bit more extended, and it's possible that we are going to take out the lows that we saw in June. But I think a lot of that damage in the cycle had been done because of all the forced selling, the liquidations that happened on the back of Luna and then back of the centralized financial players that kind of did a redux of 2008 GFC and gave crypto a bit of a black eye. So I don't think Bitcoin's not going to zero, clearly. The number of people holding Bitcoin continues to rise. It's at near all-time high. So the utility factor is still quite strong. And these are the kinds of things that I look at. So all in all, I think if rates continue to go higher, if the DXY continues to explode higher, obviously that puts all risk assets on notice. But what's very interesting is that in the last couple of weeks has been the outperformance of crypto versus other risk assets, such as equities. And we've seen that actually from the June lows. Bitcoin is up slightly from the June lows, whereas the S&P and NASDAQ are sort of taking out those lows. So I'm not saying that this is a decoupling in a long-term basis, but these are the sort of things you look for to see if the market structure is starting to change.
We've spoken to people on this podcast who are like, crypto has no fundamentals. You have a whole presentation in which you go through what you think the fundamentals of crypto are. Can you share a couple of those kind of underlying elements that you look at when you're coming up with how you see what the next 6, 12, 18 months may hold?
Fundamentals, at the end of the day, this is what really drives the value of these assets or the price of these assets. And, for many people, it's a challenge to sort of adopt or think about these assets with a framework which makes sense because it's very conceptual or it's intangible. But in the same way as, social networks like Facebook and Amazon, came to fore with massive valuations, these blockchains or these crypto networks, the same. They are driven by adoption. And there are fundamental metrics that you can use to gauge whether adoption is taking place. So I have a dashboard that I've created for both Bitcoin and Ethereum, and it'll be rolled out to more assets over time. But this looks at anywhere between sort of 35 to sort of 45 different fundamental metrics, which measure things like adoption on both of these chains. And if I just distill it down into the first principles, core tenets of what fundamentals are for crypto networks, it's simply the number of addresses holding the asset, the number of active users on the network, and the value in US dollars or whatever currency that's actually transacting on the network. These are the indicators, or these are the markers of utility. And if these things are going higher and the price is going lower, then you have a positive divergence, which ultimately at some point will self-correct.
Do you have a sense of what that point might be? I mean, you did mention, and we've been writing on the newsroom side about the kind of the breakdown of the correlation story, right? Like that Bitcoin and Ether and certain other tokens have started to diverge from the dismal overall performance of the stock market. Where do you see that kind of trajectory in this, as you've mentioned, challenging liquidity environment that we're still in?
Yeah, so I'm not in the camp that crypto's decoupling, because there's so much volatility in the market at the moment that it's very hard to read into a 1 week, 1 month trend. But if we see this continuing, where we see a significant divergence, it is telling us something, and it's probably a signal that we should pay attention to. But I think if things get worse, then I can't see how crypto will not break down alongside equities, which it's been resilient in the last couple of weeks and not doing so. Well, it's testing those lows today. So it's interesting in that when you look at the Bitcoin network, the number of long-term holders on the network is now at an all-time high. You're not seeing the long-term holders or the hodlers get shaken out by this. So at some point, that's going to matter. It's a question of how long it can sort of diverge. But yeah, I think it's something to keep an eye on.
I want to just push on that point a little bit more, because what you said there is a very interesting way to think about the market. The OG hodlers, as it were, these are folks who didn't get in 2021, 2020, even 2019. These are folks who've been in for kind of several years, bought in at much lower prices than where we are even right now. So kind of by definition, you can't be a long-term holder if you've recently bought into the market. So that would suggest from what you're saying that what we're seeing is the market, the newer entrants get either forcibly liquidated or just like opting out entirely, so that the balance is returning to the folks who've been players for a longer time. Am I understanding that analogy correctly?
Well, the definition for a long-term holder based on the data that I'm using, which is a mixture of different data providers, is actually 6 months or longer. So it's a kind of a moving goalpost. It doesn't just include those early adopters, but it includes, 6 months or later. And the people within that cohort, they're changing all the time. Mm-hmm. But if you just look at that as a group of addresses, then that's saying that is actually increasing, and the entities that have been more active in the last couple of months have basically left the network, right? There's still a lot of short-term trading on the margins, and that is really what's influencing the price. It's really that trading activity, what's happening in the derivatives market. The derivatives market is several times larger than the spot. And that tends to be faster money, short-term traders sort of involved in a lot of the perpetuals and the futures trading, futures and options trading. So it's not quite the cohort that you're thinking of, but typically what you see in, the bear markets is the short-term holders, they exit. They buy and they're already underwater within a couple of days or a couple of weeks or just a couple of months, and they exit the system. And then the people who are actually, have been accumulating over a long period of time either hold or continue to accumulate. At least that's what you definitely want to see as a bottoming indicator for something like Bitcoin. If you start to see that change dramatically, then, that's something to be a little bit more wary of. But ultimately, what will drive Bitcoin higher will be more short-term buyers coming in, owning Bitcoin, and then obviously converting into long-term holders over time.
Up next, you'll hear more from Jamie Coutts of Bloomberg Intelligence on Bitcoin's financial health. We'll be right back. We've talked a lot about Bitcoin, but you also write extensively and expansively about Ether. So, and obviously, one of the biggest stories in crypto for a while had been the merge. Is the merge going to happen? Okay, the merge is happening. What's going to happen after the merge? We're now kind of a couple of weeks. Is it a couple of weeks? What is time? We're past the merge. And you had a note, around September 22nd in which you talked about the lack of a bid for Ether and what your kind of reflections on that are. Can you just share a little bit what the premise of that note was?
Yeah, so it goes back to fundamentals again. Things like active users and the sort of value transacted on these chains. These are markers of adoption. And whilst I have a very positive outlook on Ethereum versus other L1s within the space, because of that supply reduction, because of that massive drop in inflation, which removes billions of dollars in selling pressure every year from the network. Ultimately, in order for a recovery in the prices of these assets, we need to see adoption. We need to see an increase in some of these fundamental metrics, at least the ones that I'm tracking. And what I was highlighting to my readers back in September is that whilst yes, it's great to be positive about the outlook, and I mean there's structurally some very positive things that's going to come out of it. Ultimately, it's all for naught if there isn't adoption on chain. And that's been, something that's been lacking, across the ecosystem for past 6 to 12 months.
The Ether and the Ethereum bulls, they will say, no, the flippening is upon us. Ether is going to replace Bitcoin as the number one, layer one. Just as a kind of a broad question for you, is there anything that you're observing post-merge in the, as you say, it's still volatile, it's only been a couple of weeks, that would suggest, this is having an effect on Bitcoin prices, Bitcoin sentiment at all? Or are these two markets kind of continuing to operate relatively different trajectories based on their own underlying fundamentals?
There's almost diametrically opposing forces at play in both of these assets at the same time on the positive and the negative side. So, I mean, on the positive side, one thing I'd point out for the Bitcoin bulls is that what is surfacing is a lot better data and more visibility around how Bitcoin is actually using renewable energy sources and has the potential for greening the grid. And that is a slight change in narrative that, we've heard and seen for the entirety of Bitcoin's existence. On the flip side,
it was like electricity use is fine. Don't even worry about greening the grid. Just a change of perspective, as it were.
Yeah, but I mean, through the innovation of participants on the network and just the bare basic economics of Bitcoin, which is a technology in search of the cheapest forms of energy, it is actually rapidly approaching, or it's already over 50% renewable. at least from the miners surveyed in the Bitcoin Mining Council documents, which represents, I think, around 60, 70% of all miners. I mean, if Bitcoin was a country, it'd be the greenest country in the world. I mean, that's just the reality. But through that innovation and seeking of the lowest energy cost, what it could potentially do for marginal renewable energy projects, as well as, carbon offsetting is, a surprising externality that no one really anticipated early on, but is certainly now becoming far more visible. We've seen, this being acknowledged by politicians in Texas and in other states in the United States. To jump on the other side of this, on the negative side, I mean, you've still got a lot of uncertainty around regulations. Although Bitcoin has been, along with Ethereum, depending on which day Gensler is speaking, singled out or petitioned as being not a security, which I think is, obviously positive for those two assets. But there is a lot of jockeying going on and a lot of politicking going on. So, until that gets cleared up, hopefully in the next 12 months, that could be a massive negative headwind.
Well, Jamie, thank you very much and good luck with the rest of the year. I hope we'll be able to have you back on the show sometime soon.
Thanks very much, Stacey.
You can find more of Jamie Coutts' analyses on the Bloomberg terminal or follow him on Twitter. He's at Jamie1Coutts. That's JAMIE 1, as in the number 1, COUTTS. On the next episode of Bloomberg Crypto, if you don't think that Web3 is going so great, if you're not sure that this crypto thing is everything some folks are making it out to be, it might be because you've seen the viral threads posted on Twitter by an account called, yes, Web3 is going great. We'll talk to Molly White, the software engineer and crypto skeptic behind that Twitter handle. This is Bloomberg Crypto, a daily podcast from Bloomberg and iHeartRadio. For more shows from iHeartRadio, visit the iHeartRadio app, Apple Podcasts, or wherever you get your podcasts. Send us your comments, questions, or suggestions for the show to crypto@bloomberg.net. Or find us on Twitter, we're @crypto. The supervising producer of Bloomberg Crypto is Vicky Vergolina. Our senior producer is Janet Babin. Our producers are Mohammed Farouk and Sharon Barrero. Our associate producers are Ty Butler and Moses Undum. Desta Wonderad is our engineer. Original music by Leo Sidran. I'm Stacey Marie Ishmael. Have a great weekend. Before we wrap this episode, I want to mention some exciting news from friends of the show, Katie Greifeld and Tim Stenovic. They've launched a brand new video series called Crypto IRL. For more information about how to watch Crypto IRL, the new series from Bloomberg Quick Take, go to bloomberg.com/QT. The first episode just dropped today, and we'll feature it as a bonus podcast episode in our stream tomorrow. That's right, you're getting a special Saturday episode to celebrate the launch of Crypto IRL. Congratulations to Katie and to Tim.